Good evening, everyone. Hope you guys are having a great weekend. I'm going to be going over how to find the best stocks and options contract to trade. So before I get started, I want to make sure that you guys can hear me. If you can hear me, type something in the comment section. And then as well, if you can see everything, write it in the comment section. All right, so just type something in the comment section if you can hear and see everything. All right, awesome, awesome. Thank you, Tess. Thank you. I appreciate that. Shout out to you. Also, for those if you're this is your first time tuning in, or if you are not following or subscribing, make sure you hit that subscribe button. I would greatly appreciate it. I would greatly appreciate it if you hit that subscribe button. And then afterwards, I'm going to be answering some questions. So I'm going to go through what I had planned for you guys today. And then afterwards, we're going to get some questions. So you can type in your questions, or as well, you can type in your questions as I'm going through the prezo. And then I will get to you guys as well. All right. So with that being said, let's get started. Just this. So how do we find the best stocks and options contract to trade? That is big. That is a major thing when it comes to trading options. You can put yourself in the best position to be profitable if you can find the best stocks and the best options contract. So quick little breakdown for those that don't know what option trading is, so you can understand some of the benefits and why you would trade options. So first, one of the many benefits of options trading is you do not need a lot of money to trade. So therefore, you can start trading with a smaller account. You don't need 10,000. You don't need $20,000. You can trade with $500, $1,000, whatever you are comfortable with. All right. And then that's one of the most beautiful thing about options trading. So for those that are looking to build and grow their account or making some money, you can do so with options trading. Also, you don't need to own the stock in order for you to make money from the stock. You do not need to own the stock in order for you to make money from the stock. So, for example, SPY, the S&P 500, trading over $400. In order for you to buy one share, you would have to purchase it as a whole at that price. However, when it comes to the options contract, there are plenty of options contracts where it can be $50, $75, $100, and I'll show you guys that as well. I'm going to give you guys some examples as well. All right. So benefits, you don't need a lot of money to do it. You do not need to own the stock in order to make money from the stock. And then another benefit is you can make money in the short term. On average, when you invest money for the long term, you have to wait 5, 10, 15, 20 years in order for you to get a maximized return on your investment. However, options trading, you can make money in 5 minutes and 10 minutes and 15, 20 minutes. It all depends what kind of trader you're. If you're a day trader where you're looking to make your profit in that same day, or if you're looking to make your profit over as a swing trader, which is when you hold a contract overnight. So some things to keep in mind, ways that you can make money is through calls. You can make money through puts. So calls is when you think the price of the stock is going to go up. And as the price of the stock goes up, the value of your contract goes up. Puts is when you think the price of the stock is going to go down. And as the price of the stock goes down, you can make money. So you can make money in either direction, whether it's calls or whether it's put. You will make money in both directions when it comes to options trading. All right. Some of the things to consider when picking out your options contract, and I'm also going to show you guys some example as I go more in depth, but just the overall quick breakdown. The expiration date, you have your strike price and your premium. So the expiration date is the last day that the contract is valid. On or before that day, you will have to decide on three things. The first thing is whether you're going to close out your contract for a profit or for a loss. The second thing is whether you're going to exercise your contract. That is if you are in the money. So if you are in the money, that means for a call option, the stock price is above your strike price. That means you are in the money. You'll be able to exercise those contracts. Something to keep in mind. In order to exercise your contracts, you need to have the funds to support it, because one option contract equals 100 shares. So being that one option contract equals 100 shares, you have to have the funds for that. For a put option, if the stock price is below your strike price, then you can exercise those contracts. So the strike price is also known as the exercise price, just like I was just mentioning. And then the other thing as well to keep in mind is those premiums, and I'm going to go over the premiums with you guys as well. I'm going to show you guys that. And then those premiums, that's your ask and the bid price. All right, so I'll break that down. I'll show you guys that. So that was a quick little breakdown on options trading. So the next thing we have is profitability. So when it comes to options trading, this is big, this is major. So on average, according to University of California, Berkeley, all right, according to University of California, Berkeley, on average, 40% of traders, they quit within the first month. And then 90 to 95% of traders don't make money in the stock market. They are not profitable. They end up blowing their account, or they end up failing from trading. So it is very, very important that you understand that you put yourself in the best position possible to increase your profitability, to increase your probability of winning that trade. And then the reason why that's important, because a lot of times people will lose a trade before even getting into it. And the reason why is because they don't put themselves in the best position. You don't put yourself in the best position because you're choosing bad contracts or you're choosing bad stocks to trade. You don't want to just pick a stock that you just like, or pick a stock that that's your favorite stock that you follow because you have this thing or that thing, that product. So like, for example, Nike. So if you have Nike, you're like, hey, I want to just only trade Nike, right? Because you wear Nike. You want to trade stocks that will give you a high probability of winning based on the trading volume, contracts. And I'm going to break that down for you guys as we go further in depth. Right. And also, guys, if you have any questions, feel free to type it in the comment section as well. And make sure that you are tapping that like button. Give me a thumbs up, or as well, if you're not a subscriber, make sure you tap that subscribe button. I will greatly appreciate that. So going back to what I said, right? Given that we know how difficult and hard it is based on those numbers, based on the data from the University of Cal Berkeley, that 40% of traders quit within the first month, and that 90 to 95% of them do not make any money in the stock market, it is within our best interest to put ourselves in a position with a higher probability, so therefore we can make money. We want to be part of that 5% that is profitable, that does well in the market. Right. And I've been able to be blessed to be able to do that. I've been trading full time going back since 2018. And this is why I'm on here to educate. And so you guys can learn how to do that yourself as well. Right. And options trading can be one of the most difficult, complex things to do. And that's why people struggle so much, because there's so many things you have to keep an account. However, if you can find good setups, if you can find good contracts, if you can find good stocks to trade, you will be put in a better position. So therefore, you're not blowing your account, right? So something to keep in mind, right? Because you want to have the odds in your favor. Something that you want to think about is when you are picking those stocks, when you are picking those options contract, you need to keep in mind volume, volume, volume. There's going to be a key term or keyword. I'm going to repeat it a lot. It's going to sound very redundant, but this is going to be major, all right? It's going to be very major for you guys to understand how important volume is. So stocks to trade. So as I'm talking about volume, as I was just saying, right? As I was just saying with volume, when it comes to picking out the best stocks to trade, you want to pick out stocks that have high volume. And then that starts with mega cap stocks. Then you want to work your way to large cap stocks. That is big. So mega cap stocks. These are stocks that have, or the companies that have high market capitalization. And the way that you would find that out is just the number of outstanding shares, multiply that by the current trading price. So for example, say if stock X, make up a stock. So say if stock X has 10 million shares, and then the current share price of stock X is at $50, you need to multiply 10 million shares times $50. That means the market capitalization will be 500 million. So if you do the math, that will give you 500 million. That will be the market capitalization of that stock. So we want to look at mega cap stocks. And that is because they have more volume, right? They have the highest volume, therefore you're going to get better contracts and it's going to be easiest to trade. So have highest volume, better contracts, and they will be the easiest to trade. They are the ones that have the biggest impact on the market. So things that you want to look at in order to find mega cap stocks, you have the Dow Jones Industrial Average, and then you have the S&P 500. And I'm going to show you guys how to find those stocks and pick those stocks out of that. So with the Dow Jones Industrial Average, so that is the top 30 blue chip stocks. It is the price. It's a price weighted average. It is a benchmark that is used. These are this is the benchmark. This is the benchmark when it comes to the top 30. And I'm going to show you guys that as well. I'm going to give you guys a breakdown. And with the S&P 500, as you know, for the S&P 500, it tracks the top 500, the largest 500 companies in the U.S. stock market. And then both of those is what we're going to use. We're going to look at the mega cap stocks within that. So now I'm going to show you guys some examples. I'm going to share my screen with you so you can see exactly what I'm talking about. One second, I'm going to share. When you guys can see my screen, type yes in the comment section. Just want to make sure that you guys can see my screen. Let's see. Type yes in the comment section. I'm going to share my screen. Let me know if you can see it. All right. So this is the Dow Jones Industrial 30. This is the Dow Jones Industrial 30. So like I was saying, these are blue chip stocks. These are blue chip stocks. So these stocks, they have high volume. Right. So these will be easiest to trade. These are the stocks where they have the biggest impact on the market, as you guys can see here. So we got Apple, Intel, Microsoft, Disney. So it's a bunch of them. You can go through them. So there's 30 of them. So one way you can pull this up. So what I'm using right now, this is barchart.com. And then simply just come to stocks. This is where I normally will look at, run a lot of screeners through there. And I'll show you guys different screeners you can do as well when you're on here. So whether it's finding the best options contracts or finding the best stocks to trade. So first thing you want to look at this, and you want to pick a couple of stocks. You don't need to have a million stocks. You don't need to have all 30 of them. So you want to pick about a handful of stocks, whether it's 5 stocks, 2 stocks, 3 stocks, 1 stock. So you want to pick a couple of handfuls, and then therefore from there, that's when you want to go on. And then the other thing I'm going to pull up is Finviz. Show you. And then you can run a screener there as well. So this is finviz.com. And then I'm going to show you here. So we want to go to index and we want to go to Dow Jones Industrial Average. And then from there, you can run a screener as well. And then Finviz is free. Finviz is free, as well as barchart.com. There are pro accounts or elite accounts. You can pay for that. So there is some limitation, but for the most part, some of the stuff you can get it for free. So that's something to look into. Both of those sites is something that I use regularly for screeners. So now the next thing you want to do, right? Like I said, once you get on here, you want to pick a couple stocks. And then after you pick a couple stocks, then you can look as well at the S&P 500. Same thing as well. You can look at the S&P 500 to see the top largest 500 companies that have the mega cap stocks within that. So I'm going to go back and share this again. So, all right. So now the next thing we're going to get into. Can you guys see the screen? Just want to make sure can you see the PowerPoint? Type in yes if you can. And also, guys, make sure you're tapping that thumbs up button. Make sure you're tapping the thumbs up button. And you can also share it. And if you're not a subscriber, make sure you tap that subscribe. Make sure you tap that subscribe. I would greatly appreciate it. All right, awesome. Thank you. I appreciate that. Shout out to those that are in the comment section. I appreciate that. All right, so the next thing is making sure those stocks are optionable. All right, making sure those stocks are optionable. And then the word optional, this is something I want you to keep in mind because it's going to be a very important word. Because just because a stock has a high market capitalization, that doesn't automatically make it a profitable stock, or that does not automatically make it favorable in terms of higher trading volume. Granted, the Dow Jones Industrial 30, those top stocks, as well as the S&P 500, those top mega cap stocks, overall, they have the biggest impact in the market. They have the biggest impact in the market. However, they're not it's not this, you have to kind of go in and kind of do a little bit of work to figure out in terms of the trading value. That's just only that's one of the steps to it. And what I mean by optionable, right? What I mean by optional is that even though that they have a high impact, that doesn't mean they will always be profitable. Doesn't mean that you'll always be able to trade them because their options volume might be low. And I'm going to show you an example of that. I'm going to share my Thinkorswim platform because the reason why it's important. The reason why it's important is because with higher volume, it is easier to get in and out of trades. Plus, the stock will move up and down at a faster rate. So higher volume, means you're going to get easier to, it's going to be easier to get in and out of trades, and then you're going to have a faster rate with the stock going up and down. Overall, it means you're going to see a little bit of increased volatility, and we want that. We want that for those contracts. So I'm going to show you some examples of some contracts and points of volumes and breaking down the spread so you can see exactly what I'm talking about. And then for whatever reason, for those stocks that are not optionable, some of them, they're just great for long-term investing. Even though that they're still mega cap stocks, they're great for long-term investing. They're just not, people just don't trade them. So I'm going to share my screen with you guys on the Thinkorswim platform. 1 second. And then if you can see it, once I put it up there, type in yes. Let me get a yes if you can see it. So should be good. Can you guys see the Thinkorswim platform? Can you guys see the Thinkorswim platform? Good. Just type in yes if you can in the comment section if you can see the Thinkorswim platform right now. All right, awesome, awesome. Also, quick shout out to Tess, shout out to Jeffrey Jenkins, shout out to Ryu3654, shout out to you, Patel, shout out to you, Phil, shout out to you, anyone else that's on here, shout out to you guys. I appreciate you guys for taking the time out to get on here. So going back to what I said, right, in terms of finding the stocks that have high volume and the reason why you want to trade these stocks. So I'm going to give you guys a couple of examples. So first, I'm going to show you good contracts, bad contracts, some of the stocks from the mega cap. So we're going to go with Apple. So Apple is the first on the mega cap on the Dow Jones Industrial 30. And then if you guys look here, Apple trading volume, as you can see, total volume 516,374. That's Apple. So now, if we want to go look at a stock that is not a mega cap, let's look at, let's see, stock we can go. Let's take a look at let's go Blink. Let's go Blink. BLNK. So that's Blink Charging Company. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 516,374. 5 All right, so let's take a look at the volume here. So volume here, you see the difference? This has 5,559 smaller cap stock. So let's take a look at another big cap stock. Let's go to Microsoft. So take a look at Microsoft, 227,246. So now let's take a look at another smaller one. Let's see another one. And also, if you want me to pull up an options volume for a stock as well, feel free to type it in and I'll pull up one as well. All right, so now we're looking at Microsoft, and then let's look at Microsoft, part of that, the mega cap. So now let's take a look at, let's go BlackBerry. I used to have a BlackBerry back in the days. So let's go BlackBerry. Just gonna show you the difference. The volume, 9,904 total volume. That's very low in volume. All right, I'll do one more example for you guys. All right. So let's go with NVIDIA, mega cap, and now let's take NVIDIA, over 1 million in trading volume, over 1,645,000 in calls, and then 424,000 in puts. So you're looking at over 1 million in overall volume. So now let's look at, let's go a meme stock. Let's go Virgin Galactic. I remember that was big one time. So we're gonna go with a meme stock, Virgin Galactic. So take a look at the volume, 13,000, very low in volume. And then, like I was saying before, trading volume is very important because the more volume that you have, the easier it will be to get in and out of the trades. And then the better of move you're gonna get up and down. And then here's the other thing. The contracts are going to be better. So now I'm going to show you these contracts. The contracts are going to be better. So like, for example, right here. So we're using Virgin Galactic. And with these contracts, if you notice, there's not many options here. This is very cheap. And this has the overall volume, 1,732. That's not much at all. That's not much at all. So something to keep in mind, one option contract equals 100 shares. So therefore, this would be $16. If you multiply the 16 cents times 100, you're going to get $16. So now, let's take a look at the other contracts. So if you wanted to get in some swing, you want a little further out, there's barely any volume in here. One person can buy all this by themselves. For every buyer needs to be a seller. For every seller needs to be a buyer. So that means if you're buying these contracts and there's no one on the opposite side for you to sell it to, you're going to be screwed. That's why it's very important to pick contracts that have high volume. So now let's take a look at Microsoft and Apple. Let's take a look at their volume. So automatically off the bat, you can see, just so you can see, we knew that Apple has a lot of volume. So now if you take a look at the contracts, you have so much more options. And then for those that don't know, this is the Thinkorswim platform, by the way, Thinkorswim platform by TD Ameritrade. They did merge over with Charles Schwab. So if you have Charles Schwab, you can have access to this. This is TD Ameritrade. So if you have Charles Schwab, you can also have access to the Thinkorswim platform. Just use that login and you should be good to go. And then the reason why I use the Thinkorswim platform is because you will be able to get in and out of trades without any issues, great order execution. So that is something to keep in mind. And then plus, for those that are starting, you don't have to pay for anything. So you do not have to pay to open an account. You can open an account for free, and then you will be able to get access to everything for free. You don't have to pay for different levels of trading. You don't have to pay for tiers, or you don't have to pay for market or limit orders. There are brokers out there where they will charge you. You'll have to pay for a fee for different levels. You'll have to pay a fee to be able to get real-time data. So therefore, the info might be delayed in your end if you don't have that level of, you don't have that subscription that they offer. And then also for those that are starting, if your account size is going to be funded with less than $25,000, make sure that you have a cash account. Make sure that you have a cash account. So therefore you don't get flagged as a pattern day trader. A pattern day trader is when you do 3 or more day trades in a 5, when you do more than 3 day trades in a 5 business day period, your account will get suspended. And some brokers, you'd be looking at permanent suspension. So that's something to be very mindful of. So for example, with a cash account, you can do as many day trades as you want, as long as the cash settles. As long as the cash settles, you can do as many day trades as you want. Something to keep in mind, what it means by cash settling. Say if you have $1,000, that $1,000 at the beginning, the first 2 trading hours from 9:30 a.m. to 11:30 a.m., you use $400 out of that $1,000. That means for the remainder of the day, you will have $600 left to use. So regardless of you using that $400 to get into those trades, and then even if you're in the trade or not in the trade, you still will have $600 left. Whether you made profit or whether you lost, you will have $600 left to use for the rest of the day. You have to wait 24 hours, give it to the next day for that cash to settle for you to get into another trade. All right, so going back to what I was saying, and then Patel I see Tesla. I'm going to pull up Tesla contract so you can see as well. So if we look at Tesla, and Tesla is one of the stocks that I love trading regularly. And then why? Because of the volume. Take a look at the volume. Tesla over 1 million, over 1.5 million in volume, as you guys can see. So one of my favorite stocks to trade. So this is what you're seeing right here. So like, for example, Tesla, SPY, NVIDIA, Amazon, AMD, Tesla. So these are the stocks that I trade regularly, QQQ, SPY. So these are the stocks that I trade regularly. Why? Because they have high volume and you get the best contracts. So therefore, I find a couple and I'm going to show you guys exactly what I'm talking about so you can see. I'm going to pull this up just so you can see what I'm talking about. So I'm going to share this screen. So this is my Discord. I'm going to show you guys stocks that I trade regular. Like I'm telling you, you got Tesla, AMD, Tesla. These are the regulars. Why? Because they have high volume. Tesla again. So we can keep going. Tesla, NVIDIA. Let me go to one watch list to make it a little easier for you guys. So Tesla, NVIDIA, AMD, Amazon. So those are the regulars. So you can see, I'm going to scroll up too as well. Again, Amazon, Tesla, AMD. So you just need to pick a couple of handfuls. You don't need a million stocks to trade. Just pick a couple and you'll be good. Pick a couple. And then also things that you're going to notice is these stocks, they have certain habits, certain patterns and things that they like to do. So that is something to be very mindful of. So for me, I like to trade bull flags. I like to trade bear flag patterns. All right. So that's something with these stocks we get a lot of, as you can see right here, bull flag pattern. So this is when you have a strong upward price action and you'll start to form this pattern. You get a continuation to the upside. All right. So these are the regulars, as I was telling you: Tesla, AMD, NVIDIA, Amazon. And for those that are not familiar, the link will be in the description to get access to my Discord. So this is right here in the watch list. So this is where I give everybody a heads up, where I give everybody a breakdown of every trade that I get into before I get into the trade, so everybody can understand it for themselves. So you're not just blindly entering a trade, not knowing what to do. So one of my biggest pet peeves is when people get into things without knowing, and it's your money. You need to understand why you're putting your money into that stock, into that contract. So I make it my business to explain it to you. Whether you win the trade, you'll know how to make that money again, or whether you lose the trade, so you'll know what to avoid doing, so therefore you don't lose. All right, so this is why I explain and give you guys the breakdown of everything. I also let everyone know the contract price before I get into the contract. I let you know the contract, what contracts that I am buying, so therefore you can get ready to get into those contracts with me. So you get lots of advance notice. And then after, I will come in here. I will send out the signal. We'll send out the alert. And every trade that I get into, they all are small account friendly. So this trade was $115, $108, $99, 98,000. That's because one option contract equals 100 shares. So you have to multiply 100 times that contract to get you the true price. So $98, $120, $87. And then after I get into that trade, whether it's day trade or swing trade, I will come in here. I will keep everyone posted on what's happening with the trade, when they should be taking profit, when I'm closing it, when you should add your trail stop. I hold your hands throughout the whole process. And like I was saying before, one of the benefits of options trading, you don't have to hold the stock for a long time in order for you to make profit from the stock. So for example, with this Tesla trade, 942 and was out by 947. So it took me 5 minutes to make 22%. 5 minutes to make 22%. And then, by the way, my winning percentage in the last 12 trades, I've won 11 out of 12. In the last 20 trades, I've won 15 out of 20. And then in the last 30 trades, I've won 22 out of 30. And in the last 50 trades, I've won 38 out of 50. Winning percentage is above 75%. And as well, you can see, shout out to any of our members. If you guys are in here, shout out to you guys, because I can say a lot of things. It's not about what I say, but are you guys being profitable? Are you guys making money as well? So shout out to anyone that's on here that is part of the server. I appreciate you guys for being valued members of the server. Let's take a look at one of the testimonies from our members. Shout out, this is Carbides, one of our members. Shout out to Junior and all his education. My portfolio is doing amazing. After I had emotionally driven loss, I plan on scaling up my contracts. I feel I get totally comfortable and rid of any emotions in my trading account. Position size, risk management, and patience is key. Thanks, Junior. I have learned to protect my capital. Shout out to him. His account is looking lovely. Shout out to you and that, and any one of our members that's still in here. And like I said, because I can say anything, it doesn't matter. It's all about our members. And then for my long-term investors that's on here, I got you as well. I'll let you know when I am buying for the long term. I'll let you know what prices you should be looking to add your to your portfolio for these stocks. I'll let you know what your portfolio in terms of stocks, different, how to diversify it. I give you a whole breakdown. All right. So for those that want to get access to this, just click the link that's going to be down in the description, and it will take you here. And this is the free server. It will take you to the free server. In the free server, there are two servers, the premium server and the free server. The free server is where I teach you how to go out and get it yourself. So just like I'm on here, right? I have free courses, free videos teaching you how to go out and get it yourself. So therefore you can know how to fish. So you can know how to go out and be profitable in this market. And then on top of that, do free webinars, just like I'm on here doing a free webinar. I do free webinars teaching you. This is all for free. This is part of the free server. And then on top of that, every morning I send out a free watch list with all the stocks that I plan on trading for the day, with the prices for calls or for puts. I let you know every stock that I plan on trading with the price I'm looking to get into them, to target if the setups are there. I let you know that in advance, so therefore you can go out and get it yourself. All right, so this is all for free, by the way, so you can just go out and get it. And if you need more help, what I would recommend is book a one-on-one coaching call. Once you come in here, click on that link. It's going to take you here. And then it costs $175. It costs $175. And this is for the one-on-one coaching. I do plan on going up in the new year. So for those that want to book, I would book now before the new year start. I do have a Black Friday sale going on. For those that are going to be on YouTube, if this video is still out, it's probably not going to be valid anymore. But for those that are in here now, you can still take advantage of the Black Friday sale, where you get 40% off on your purchase, which will take 40% off the overall price. And that is valid until the end of day today. And that's to do one-on-one coaching, mentorship, if you need help with that. And then to get access to the premium server. So this is where I send out alerts, day trading, swing trading, and long-term investing. Just click on that link. It will take you here. You can do a 7-day free trial and you can see it all for yourself. The monthly subscription is $39.95. The yearly subscription is $349.99. I make sure to keep it small account friendly. There are servers that are charging $100, $200, $300. I make sure to keep it small account. And on top of that, for those that do have smaller accounts, every trade is for small account friendly as well. Everything costs less than $130. And then for those that are on here, you can use the discount code. It is still valid until the end of tonight. So if you would like to join, if you're on here now, if you would like to join, you can use the discount code Black Friday, and that will give you 40% off on the yearly subscription, or 40% off on your first month. The regular price for the yearly was $479.40. I had brought this down to $349.99, taking away $130 to make this a little bit more small account friendly. At the beginning of the new year, I do plan on going back to the regular price, and you can merge those discount. So the discount is Black Friday, and that will take 40% off that price. Just going to show you. Boom. So there was already $130 to bring down to $349. Now this shaves off $140. So you're looking at about $140 to $130, $270 you're saving. Brings your price down to $209.99, and that's on the yearly subscription. And then the discount code, you can also use it in the for the monthly subscription. This will give you 40% off for your first month. 40% off for your first month. As you can see here, it brings the price down by $16 on average, $15.98 to be exact. It brings your price to $23.97 you'd be paying. You can also do a 7-day free trial if you want to see it for yourself. The discount code is not applicable to the free trial. Why? Because it is for free. And I just showed you overall, once you get into the server, what it would look like. And then once you get into the server, something that, well, once you sign up, you're going to get 2 emails. The first email will be your receipt. The second email will be the link to the server. So make sure you authorize that member for bot. And the link to join the server will be down in the description. So make sure you're clicking that link. So once you get into the server, what I would recommend is start with the new member guide. I have a guide, a breakdown for you on how you should be investing, getting set up, so getting into a trade, a risk management guide. This is very important. Just like what I was saying in the beginning, how it is very, very critical, because it's very, what I was saying in the beginning is that over 40% of traders, they quit within the first month, and 95% of traders never make money. Part of that is not putting themselves in the best position to be profitable. And something to keep in mind is risk management is one of the most important things you can do for yourself by protecting your capital. So therefore, I have a risk management guide, so you're not over leveraging, so you can put yourself in the best situation possible when you get in there. All right, so make sure you go through that, and then you should be good to go. All right, so now I'm going to get back, share that screen again, and I'm going to take a look at some options contract, and then I'm going to answer some questions for you guys. So going back to what I was saying in terms of the options contract, you want to get the contracts that have high volume. Shout out to Dave 3D. Yes, sir, Tesla. That man is a sniper. Heli, how you doing? Shout out to you. Guys, make sure you're tapping that thumbs up button. Make sure you're tapping that thumbs up button, and make sure you click on that subscribe button. I'll greatly appreciate it. And then any questions that you guys have, feel free to type it in pertaining to stock market options trading. So going back to what I was saying, so this was Tesla, all right? So this is Tesla. So with Tesla, there's high volume, as you guys can see. There's a lot of volume that we have here. So one of the main things, one of the important things, one of the main reasons why volume is very important, if you look at the contract prices, this is about a 2-cent spread difference. This is about a 2-cent spread difference. So if you look at the axe price, $1.05, and in the bid price, $1.03, this is a 2-cent spread difference. The higher the volume, the tighter you're going to get in spread. So if I were to purchase this right now and I instantly try to sell it, it would sell at this price. So you want the contract prices to be tight, the spreads to be tight. I like the spreads to be within 5 cents of each other. Why? Because you want to put yourself in the best position possible to be profitable. You don't want to get into a trade. You don't want to get into a trade where you're starting the trade down 15, 20%. So like, take a look. We're going to Tesla. So now let's take a look at, we had Virgin Galactic we were looking at. So let's go Virgin Galactic before, and let's take a look at their contract so you can see the difference. Look at these spread differences. Look at these spreads difference. 49 cents, $1.01, 17 cents. Like it. This is why it's very important. There's not barely any volume in here. So you want to give yourself a fighting chance. I see a question in here. Ryu 3654. Shout out to you. Question: how do we switch from the monthly to the yearly? Great question. So from the monthly, if you go in your Memberful account, so log into your account. When you log into your account, you'll see an option for subscriptions, and then you can upgrade it from there. You can upgrade it from there. You're going to see the option, and when you're just going to use that discount code Black Friday before the night is over, and you can upgrade it from the monthly to the yearly. All right. So in your Memberful account, log into your account. Once you sign into your account, you're going to see an option to look at the subscriptions, and then from there you can upgrade it. And for whatever reason, if you're not understanding, if you're still having some troubles with it, send me a direct message in the Discord. Send me a direct message in the Discord, and then I can walk you through that as well. All right. So you should be good. Just use the discount code Black Friday until the end of tonight, and you'll be able to upgrade it from the monthly to the yearly. So back to what I was saying. Let's take a look now. That was space. Oh, something else to keep in mind before I forget, guys. And I said this a little earlier as well. Just because a stock is a mega cap stock, that doesn't automatically make it optionable. So something to keep in mind is that. So I'm going to pull up, for example, I'm going to pull up IBM, because IBM was one of those mega cap stocks. But let's take a look at IBM. So IBM, if you look, volume, trash. Look at these contracts, trash. This is a 10-cent spread difference. So certain stocks are great for long-term holds, but they're not great for trading. Certain stocks are great, I repeat, are great for long-term, but they are not great for trading. So that is something to keep in mind. So IBM, if you look at these contracts, this is a 10-cent spread difference. So I would pay $1.14. So this is the axe price. This is the axe price. So the axe is the lowest someone is willing to sell a share, and then the bid is the highest someone is willing to pay for a share. So $1.14, that means $114. As soon as I purchase that at $1.14 at 114, instantly, if I try to sell it, that means I am selling it at $104. $104 you'd be selling it. So therefore, you're starting to trade down 5, 10, 15, 20%, depending on how far the spreads are apart from each other. That's why it's very important to trade stocks that have high volume. This is 249 in volume. All right, let's take a look further so you can see. This has 8,901 in volume. 8,901 in volume. So it is very important to keep that in mind. Before you trade a stock, look to see the volume. And then from there, you should be good. That will let you know all that you need to know if the stock is even worth breaking down. I'm going to give you guys a tip to show you how you can run a couple of scanners. Put this back up. I'm going to show you guys. And I'm going to show you guys. This is going to get into the next one. I'm going to flip it. So all right, so I'm going to show you guys a couple of ways where you can find contracts and a couple of things you can do to kind of make things a little easier on yourself. And these are some things that I do as well. So I use the earning reports, I use upgrades and downgrades, and I run a couple of scanners. And for this will help you, because if you don't know what to trade, what contracts to trade, this will make things a little bit easier for you. So I'm going to share this with you guys. So let me know if you can see this when I share this. Let me know if you can see it. Type in yes in that comment section. All right, so I'm looking at the market watch. Type in yes, and also let me get a thumbs up. Make sure you're tapping that thumbs up. Make sure you are subscribing. I greatly appreciate that. And also feel free to share this. So something that I look at, I keep in mind in the morning times before I trade, or even in preparation for the week before I do anything, is what stocks are getting upgrades and downgrades. Because if a stock is upgraded, that means there's a higher probability that stock is going to go up. If a stock is upgraded, that means you're getting a target raise, a price upgrade. There's a higher probability that the price of that stock is going to go up. If you get a downgrade, there's a higher probability that stock is going to go down. So website I recommend is marketwatch.com. And with MarketWatch, you can take a look at the upgrades and downgrades. It will let you know what stock is upgraded, what stock is downgraded. So this is something I look at. So therefore, if I am planning, so for example, say if NVIDIA, I see that they get an upgrade, I know, all right, NVIDIA, there's more incentive, there's a higher probability NVIDIA is going to go up. If I see a downgrade, there's a higher probability it's going to go down. Options trading is all about probability, and you want the probabilities to be in your favor. So therefore, that's going to increase your probability right there. That doesn't mean every stock that you see in here, you should automatically trade it. So you're just looking at the mega cap stocks. If they're in here, and if you see an upgrade or a downgrade, that will help your chances. So the other thing that I'll look at is the earnings. So I will trade a stock up until the earnings and after the earnings. I don't trade it during the earnings. I don't play earnings at all. Why? Because there's a 50% chance that I will lose my money when it goes up or down, because it's very unpredictable. Anything can happen, or you can lose both by if you get IV crushed. So I will look at the earnings calendar, and based on the earning calendar, whatever day. So say if being that today is Sunday, so say for Wednesday, I know Tesla has earnings on Wednesday. So I know Monday and Tuesday, Tesla is going to be trading with more volume. So there's going to be increased volatilities. And then, like I said before, if there are more volumes, you're going to get better contract. It's going to be easier to get in and out of the trade, and you're more likely going to see a move with that stock. So first thing, upgrades and downgrades. Second thing, earnings report. And now the third thing, you want to run a scanner. We're going to run a scanner. I'm going to show you how to run a scanner. So 1 second, I'm going to show you. And then you can let me know, type in that comment section, if you see my Thinkorswim platform, so I can show you how to run a scanner. All right, awesome. Thank you, Luis. Thank you, Ryan. So in here, what you want to do, this is the Thinkorswim platform. You want to tap where it says scan. Let me make this a little bigger for you guys to see. So you want to tap where it says scan. So you're going to get these over here. So what you want to do, you want to filter it to where it says options. So let me get this out of there. All right. So you see where it says add filter, you would filter it to options. And then you want to go to volume. So you're going to scroll down. You're going to look for volume. Once you tap volume, what you want to do, you want it to be at a minimum of 10,000 in volume. That is a decent amount to start, a minimum of 10,000 in volume. And then you want to run a scanner, and that will tell you the best contracts that are being bought and sold at that moment. Right now, the market is closed, so you're not going to see anything. But with the scanner, this will have all the contract listed out, and you would see all the volume for them. So again, I repeat, come to scan at the top. When you hit scan, it's going to bring you over here, and you want to say option, and you want it to be on volume, and you want the volume to be at a minimum of 10,000, and then you're going to run a scanner. And once you run your scanner, it's going to show you all the stocks that are all the contracts that are moving, the best stocks right now, and the best contracts that are moving. So therefore, if you don't know what you should be trading or what you want to trade, that will help you in figuring out, okay, cool, I'm going to be trading this stock right now because there's more contracts. And remember, the more people that are buying and selling, that means you're going to have a higher probability win, because now for everybody, there needs to be a seller. For every seller, there needs to be a buyer, and you're going to get better move. You're going to get better order execution, and you're going to get a faster rate of the stock moving up and down. So the second way that you can run a scanner, I'm going to show you. I'm going to share this real quickly, and you can let me know when you see the screen as well. Type in the comment section yes when you can see it. So under Thinkorswim platform. So the under Thinkorswim platform. That was just one way to run a scanner. The second way to run a scanner, you can do it on barchart.com. This is one of the sites that I use regularly. And then under here, what you want to do, where it says options, you want to click on options. When you click on options, you want to come down to most active options. This will let you know the contracts, the stocks that are moving the best right now. It will let you know the options volume. It will let you know the put to call ratio. So therefore, it will make your life a lot easier. A lot easier. So for example, anytime that I'm trading something, I will look to see, I'll run a scan on the Thinkorswim platform. I'll run a scan over here. This will let me know the overall volume, because if the volume is low, that means you're going to get more choppiness. You're going to get slower movement. If there's higher volume, that means you have a higher probability that the trade is going to be in your favor. Not saying that it's automatically going to go in that direction. It's just in terms of being able to get in and out. And then when you have volume, it's going to help with the movement. And I'm going to show you guys an example of why volume is important. So let's pull this up. Can you see the Thinkorswim platform? Type in yes in that comment section. Also, make sure you guys tapping that thumbs up. Make sure, let me get a thumbs up, as well as hit that subscribe button. If you haven't subscribed yet, make sure you're subscribed. I would greatly appreciate that. And also feel free to share the screen. So at the bottom, something that I monitor all the time: importance of volume. See, volume. So this tells me the amount of contracts that are being exchanged, sold, whether it's people buying or people selling. When you see more red, you see these red candles, that means more people are selling. People are selling their contracts. We're going down. All right, puts. Take a look. Increase selling pressure. Increase selling pressure. Increase selling pressure. See those red candles? Green, buying pressure. So that's why it's important to have volume, because that will dictate what direction. Think of a tug of war. In a tug of war, if one side is pulling one side, if more people on one side are pulling, that means it's going to influence the direction of where that's going. So think of the stock. If you have more selling pressure, that means it's going to go down. If you have more buying pressure, it's going to go up. So when it comes to buying contracts, when you're figuring out, hey, am I going to get into puts or calls? If I see there's a lot of selling pressure, that means I'm going to have a higher probability to get into some puts to make some money with some puts. If I see a lot of buying pressure, that means I'm going to have a higher probability to make money with some calls. So that's something for you to remember. Volume, and volume, like I said before, is going to sound redundant. It's going to sound repetitive, but that is very important for you to know. All right. And then let me share this. Let's go back. I'm going to share the PowerPoint again to answer any questions that you guys have. All right. So if you guys have any questions, feel free to type it in. If you guys have any questions, feel free to type it in. Before I get off, feel free to type it in and I'll answer your question in the next couple of minutes. So type in your questions at the bottom. Also, shout out to everybody that's on here on a Sunday night or Sunday evening, afternoon, morning, depending on wherever you're checking in from, wherever you're watching. I appreciate you for getting on here, because you didn't have to. You didn't have to. It's a Sunday. You could have been doing something different. But the fact that you came on here, shout out to you, and I appreciate you. I appreciate your time. Thank you. Jeffrey Jenkins, is the spread difference the difference between the axe and the bid price? Yes, correct. The spread difference is the difference between the axe and the bid price. I'm going to share it. I'm going to so you can see. I'm going to share the Thinkorswim platform so you can see. Again, great question, by the way. All right, so we're going to go take a look at some contracts. Let's make this smaller. All right, so Jeffrey, like I was saying, the spread difference. This is the ask price, the bid price. These are your spreads. These are the options premium. These are the spreads. And remember, the ask price is the lowest someone is willing to sell a share, and the bid price is the highest someone is willing to pay for a share. So as soon as you get into these contracts, so like for example, this is IBM, which I would not trade this. Why? Because there's low volume and the spread difference is 10 cents. So think of it this way, right? The spread difference is 10 cents apart. That means as soon as you purchase that stock, at $114, it will go directly down to $104. That's about a 10%. 10%, you would be starting that trade down about 10%. So that's something to keep in mind. So that's why you want the spreads to be tight. And I like the spreads to be within 5 cents because you want the odds to be in your favor. The last thing you want to start a trade down 10, 15, 20%. That means that stock is going to have to outperform in the direction, whether it's calls or whether it's puts. And also something to keep in mind as well. If there's not a lot of volume, you might get stuck in your contract. You might get stuck because you don't have anybody to sell it to. And what will happen is you're going to end up getting your contract expired worthless. That means it's going to go to zero. And if you are in the money, then you're going to have to cough up a lot of money because it's going to get exercised. And one option contract equals 100 shares. So you're going to have the funds to cover that. If not, you're going to end up owing the broker. So you always want to close your contracts before you get to that point. Next question. Haley, is the stream going to be available after? Yes, I'm going to make it available after. So yes, I'm also recording this as well. For anyone that missed it, I will release it in my Discord. And then for those that want access to my Discord, the link will be below in the description. So make sure you tap the link to get in. And once you get into the server, in fact, let me just show you guys real quickly for anyone that is on here. I'm going to pull this up one last time for those so you can see. So once you click the link that's going to be in the description, it's going to bring you here. And then I will release the recording for anyone that, if you missed it, I will release the recording in here. So Haley, I will release it in here, or it's going to be in the premium where I will release it here on courses and education. And then for those that click the link that are not part of my Discord, once you click that link, it's going to bring you over here, and this is free. This is free. You can watch it for free. I have a bunch of other courses free as well, teaching you more about options trading. And then I will also let you guys know the next time that I'm doing a free webinar, just like I'm on here, educating you guys. And as well, every morning I send out a free watch list. So this server is mainly used to teach you how to go out and get it yourself. And then if you need more help or if you need some mentorship, some one-on-one, you can book a one-on-one coaching call. I was sold out, but I did open my availability and added a few more time slots. So first come, first serve. After I reach the limit, I am going to block off my calendar. So be very mindful of that. And then for anyone that wants to sign up, you can sign up before the end of today using that discount code Black Friday to get 40% off. And this is for 1 hour. This is a 60-minute Zoom call live between me and you, teaching you options trading, how to invest, how to get started with options trading, risk management, anything you can think of pertaining to stock market options trading. I'll go over it with you. And then to get access to the premium server, you will have to upgrade, click on upgrade. And also too, because we always get people where because things are for free, they may question the legitimacy of it. What I would recommend is go through the testimonials, and I have testimonials going back since 2021, going all the way back since 2021. Shout out to all the members that's been with me. Thousands and thousands of people have made money following my alerts, and you can scroll back and you'll be able to see for yourself. Just give you a quick little view of it so you can see. And this goes all the way back since 2021. Shout out to any of our members if you're in here. I appreciate you guys for being valued members of the server. Small account friendly. These are testimonials, and I can go all day, as you guys can see. Shout out to this member if you're in here. about $400 in this play. Shout out to you. Right. And then to get access to the premium server, just simply click that link. Once you click that link, it's going to bring you here. You can do a 7-day free trial. You can see it for yourself. Monthly subscription is $39.95. However, for anyone that's on here right now, you can use that Black Friday discount code where it'll give you 40% off in your first month or 40% on the yearly subscription. So by the time, for those that are not here live, you see this on YouTube, the discount code will not be valid. The discount code will not be valid. So if using the discount code, for those that are on here now, Black Friday, regular price for the yearly subscription, it is going back to $479.40. I did bring it down to $349.99 to make it a little bit more small account friendly, given that interest rates and everything. So I was trying to help everyone out by making it a little bit more small account friendly. So if you can use that discount code, it will shave off another $140. So you're looking at overall about a $270 savings. So going from $349 to $209.99. And that's using that discount code Black Friday. Same thing for the monthly. It will take 40% off on your first month. 40% off on your first month, bringing it down to $23.97. The discount code is not applicable to the 7-day free trial. Why? Because it is for free. You can try it. You can see it for yourself. My winning percentage is over 90%. The last 12 trades, I've won 11 out of 12. The last 20 trades, 15 out of 20. The last 30 trades, 22 out of 30. The last 50 trades, 38 out of 50. So we're just only, I think, about 10 to 12 losses. The last 100 trades, you can go even further back, 75 out of 100, winning percentage over 75%. And like I said, you can see everything for yourself. So I'm going to put it back on the Thinkorswim platform, answering a couple more questions for you guys. I'm going to share this. All right, so let's go through the questions. Type in your questions. Let's see. Jay Easy, is $500 a good way to start options trading? Great question, Jay Easy. Yes, you can start with whatever amount you are comfortable with, whatever amount you are okay risking. Like I was saying earlier, every trade that I get into is small account friendly. So every trade costs less than $130. So you can get in an option trade. So like the most recent trades was at $1.08 or like 98 cents. That means $98. So you can get into trades with that. Something to keep in mind: the smaller amount that you start with, the longer it's going to take, because it's going to be harder to get the best contracts, because you got to go a little further out of the money. And also, in some ways, it is better for you to start with a smaller account than for you to start with a bigger account, because you can make those mistakes, and it will be better for you to learn and make mistakes on a smaller account than a bigger account, where if you were to have a loss or you make a mistake, and that will affect your emotion a lot more than a smaller account. Granted, nobody wants to lose. Granted, you want to make sure that you're protecting your capital, which is why I have the risk management strategy. So yes, $500 is good to start. And also keep in mind, $500 is all you can do. That's fine. Start with that, because I don't know what your current financial situation is. So you have to do what is best with you. You have to be able to start whatever you are risking, you are okay risking, and whatever amount you are okay taking a loss on. I repeat, whatever amount that you are okay risking, and whatever amount that you are okay losing. Like I was saying, options trading comes with a high risk. So you have to be able to understand that. And once you understand that you're good with that, then you should be good to go. Phil Dubs, can you please explain the expiration date versus the prices of the contract? Great question. Great question. So I'm going to show you. Shout out to you, Phil Dubs. So let's use NVDA, one of my favorite stocks to trade. And the reason why: volume, volume, and volume. So NVDA currently at $477.76. All right, that was the price that it closed at. If you look at the contracts, you have a bunch of different contracts that are here. So This is the share price. So if you wanted to buy one share, this is the price that you would have to pay for it. That does not mean that's the price you have to pay for a contract. So just because the price is at that price does not mean that's the price you have to pay for your contract. And I'm going to give you some examples in NVDA where the price of it was different than, let's pull this up so you can see. I'm going to show you some different options for NVDA. Actually, no, let's go Tesla. Tesla was the most recent trade that I got into. So let's do Tesla. Tesla was the most recent trades. So Tesla, $235.45. So I'm going to share this screen. So we're going to go on the contract price for Tesla. All right. So that last trade, $1.15. This is the cost of the contract. And remember, we multiply 100 by it because one option contract equals 100 shares. So this was the expiration date. The expiration date, that's the last day that the contract is valid. So the expiration date is very important because when you're picking out your contract, you want to be able to pick out something that is reasonable, that is doable. If you're day trading, I would look at the weeklies. So anytime that I day trade, I look at the weeklies. And if you're swing trading, you can look at 2 weeks out, depending if you're just looking to hold it overnight or a day or two. And if you're doing leaps and you want to go further out, about 1 to 2 years. So the expiration date, that, like I said, that's the last day that the contract is valid. So the closer you get to the expiration date, the faster you're going to lose the value of your contracts because of time decay. So say if on a Monday and the contract expires on Friday, when you get to Wednesday, the contracts, the value is going to move a lot faster. It's going to lose value because of time decay. You're closer to it. So if you're getting into a trade, you don't want to just sit and hold that trade because the price of your contract, say if I got in at $1.15 and I decide to hold that contract and it's not moving in my direction, it's going to just go down. Even if it's moving sideways, or if it's going down, but it's not going down at the rate that would like it because of some chop or a little bit bounce here and there where it's not a straight shot down, you're most likely going to be losing that trade because of time decay. So expiration date is important. Why? Because you want to give yourself time. Say if you're swing trading, you want to go a little further out, like I was saying. And the reason why, because say if you have some news that come out overnight, that will affect the cost of your contract. So you want to make sure that you give yourself a little bit of space. In day trading, the reason why I use the weeklies is because it has higher volume, and I'm just looking to get into that trade and out of that trade within a short period of time, within 5 to 10 minutes. So just like with Tesla here, $1.15, $1.08, $108, $99, $98. I'm going to show you the cost of Tesla at the time was $235 when I sold it. I bought these contracts at $1.15, like I just showed you. I made 10% in less than 5-10 minutes. Let's see, 10:02. And I was out by 10:07. That's 5 minutes to make 10-11%. Mind you, the S&P 500, you're looking at a return between 10 to 15% annually. And we just did this about five minutes it took. Cost of the stock, $235. Cost of the contract to get into this, $1.15. Expiration date was Friday, which was the weekly, this past Friday. As you can see, same thing here as well. $1.08, $241. So the contract price and the stock price, two different things. So your strike price, for example, the strike price here says $250. The stock does not have to go to $250. This was a call. I was betting for that stock to go out. I was betting for Tesla to go out. It does not have to reach that target price. As long as it moves in your direction, if it's moving, going in your direction, your contract price will move more likely will move in your direction if it's not stuck and chopped due to time decay. So whether it's 5 cents, 2 cents, $1, you can make profit. It does not have to go to that price. So with that Tesla, so that was, I'm going to show you. So this was 9:42, November 21. So I'm going to show you what the price was at before. 9/22, November 21. I'm going to show you. And just like I said before, every trade is dated. It is in the watch list so everybody can see and know everything for themselves. And I have this in here. Let's go to November 21. So let's see here. So every trade breakdowns are all here for everybody to understand for themselves. So therefore, you're not just blindly getting into a trade. So let's show you the Tesla setup. So this was Tesla right here, November 21. For Tesla, I'm looking at Tesla November 24th, $250 call. That was a $250 call I was just showing you. Be ready if I send it. So this was me letting our members know I'm getting ready to get in Tesla calls. This is the contract for them to get it ready, to pull it up. And this is where I'm going to be getting in at. That's the contract I'm going to get in. This was a setup. This was a bull flag. It was a bull flag setup. And I was looking to get a bounce off this purple line, which was the 8 EMA. Take a look at the price. At the time, Tesla was at $240.48. $240.48. I was just looking to catch the bounce on that. And then take a look afterwards. $242.71. So we can go back. So this was me letting everybody know in advance. And then this was when I came in here. At that time, Tesla, $250, and that was at $1.08. That was at $1. That's the cost of the contract. Mind you, Tesla was around $240 or $241, the price that I just read off to you, as you can see. And then take a look. We sold it, $241.26, about 22% in profit. And this was about 5 minutes that it took to get that. So expiration date, you need that in terms of figuring out how close and how far you are because of time decay. If you're day trading, just look at the weeklies. If you're swing trading, look at 2 weeks out. If you're looking for overnight or couple of days. And then if you leap, you want to look at about 2 years out. Something else to keep in mind. If you're holding it overnight or however long as a swing trader, you want to be able to be out of that contract. You want to know, hey, I'm going to be out. This is still good or bad. You want to determine before you get to the expiration date. So you want to figure that out by the halfway mark, because once you get to the halfway mark of that expiration date, it's going to be moving even faster. The volatility is going to increase with those contracts. So you're going to lose value because of those time decay. So that's something else to keep in mind. All right. So let's go to the next questions. Type in your questions, guys. Type in your questions. Let's see. Will you be live while you're giving alerts when signed up into the server? Jay Easy. So every trade that I get into, everything is all live. That's through text through the Discord. In terms of, I'm not sure if you're asking in terms of being live on video, video audio. No, I'm not live on video audio. I am in the server. Everything is through the Discord server while I'm messaging you and letting you know everything in advance, giving you plenty of time to be ready, plenty of time so you can get into the trade with me. And I don't just get into a trade without explaining it and letting you know. So every trade, you'll have ample time to know before I get into that trade. And then you'll have your contract ready as well, just like I showed you. And then on top of that, when you are in that trade, I am keeping you posted with what's happening with the trade. I will let you know when you should be closing out the trade, when I'm closing it out, when you should take profit. I hold your hands throughout the whole process from the beginning to the end. Let's go to the next question. Great question, by the way. Haley or Heli, I'm sorry if I'm pronouncing this wrong. Do you trade off support and resistance, the level of price action? Great question. Price action and resist, all that's part of the same thing. I trade price action, support, resistance. Yes, that is big. That is key. Something that I recommend, I'm going to share this with you. If you want to learn how to find support, resistance, price action, I would recommend watching this video. It is also on here as well. I'm gonna pull it up and I'm gonna share it with you so you can see. So I would recommend watching this video, Support and Resistance, right here. I recommend watching that video where I go into it, I break it down so you can understand price action. This is free. As you guys can see, I teach you literally the technicals, how to find support, resistance, dojis, the setups that I get into. I know it's not common. Traders are not doing that. Everybody's keeping everything a secret. However, I don't care. Everything is recyclable. I didn't invent this, and it does not hurt me to teach you. I trade full time. I'm going to continue to trade full time. This is my passion. This is what I love to do. I've been doing it since 2010, been trading full time since 2018. I started this as a way to help people, and I'm still doing that. And just like I'm on here, educating and answering questions is the same thing I'm going to continue to be doing, God willing. And wake up every morning, do that exact same thing. That's what some people, have their passions. This one is mine. All right, whether you are in my server or not, this is what I'm going to continue to do. However, this is something you can learn and apply it because the stock market will always be here. So it would be within your best interest to learn and understand this for yourself, which is why I'm educating you. What I don't anticipate everyone to be with me for 5, 10, 15, 20 years. I do not anticipate that. However, that does not mean you can't learn. That does not mean you can't take this for yourself. Just like I'm teaching and breaking down. You see the setup right here? I show you how I used it. I'm going to show you. Right here on a trade, on a swing trade. It's a bearish pin bar. So if you want to understand the price action, how to chart, I recommend watching this video. And I have a lot more videos. These are all free. When you click the link, and that's in my description, you can come to the educations and videos, and then you'll be able to get that. So I don't have any paid courses, by the way. So you can get these courses all for free. And make sure you're hitting that subscribe button. Make sure you're getting a thumbs up as well. All right, so let's read off some more questions for you guys. Let's see here. Next question. How many contracts do you usually purchase? It all varies. Great question, by the way. It all varies based on my risk management. I normally have a sweet spot. And what I mean by that is between 1 to 5% is the max that I will pay the max out of my portfolio from the overall balance that I will pay to get into that stock. So that means, say if the contract's at a specific price, I will buy a certain amount that's within the 1 to 5% of my overall account balance. And the reason why, because you want to have a risk management strategy, and that can vary. So the contract price can go to $1.30. I'll always keep it below that, but I have a sweet spot where it's within 1 to 5%. And it can vary depending if you're in the beginning of the week or in the end of the week because of time decay, because the faster the closer you get to the expiration, the faster it's going to move. So for example, say if you have 0 days to expiration, I may keep it a little lighter, or say if you have some reports that come out, I'm going to keep my position size a little lower. So there's a lot of different things. So depending on the volume, how fast the stock is moving. So there's so many different variables, but the overall, to answer your question, it all varies between 1 and 5% of my account balance. So what I would recommend for you, anybody else that's out there, just because you may see me buy a lot of contracts or somebody else buy a lot of contracts, don't focus too much on that. Focus on you being green and as many trades as possible, because everyone's account size is different depending on what their financial situation, circumstances are. Everyone's journey is different. So you just have to do what's best for you, and don't look to over leverage because somebody else may have purchased more. If you have the funds to do it, if it's within your risk management, then go for it. If not, then I would stick to that risk management and to keep in mind that most traders, they fail because they over leverage. They try to buy more contracts and they're trying to get rich overnight as opposed to staying within their risk. That is the most important thing for you to remember. Risk management, risk management, risk management. So just remember that. So therefore you can protect your capital and volume as well too. Like I just broke it down for you guys. All right. So with that being said, guys, I am going to log off. I've been on here for the past hour and 20 minutes. So I appreciate those that are on here. I thank you for your time. You didn't have to be on here, but you got on here. So the fact that you took the time out of your day, thank you. Thank you. Thank you. Thank you. Whether you liked it, give me a thumbs up, whether you commented, whether you shared, thank you. And then I will look to schedule another one in the near future for you guys. And if you guys have any more questions, feel free to reach out to me directly in the Discord. Feel free to reach out to me directly in the Discord. And also something to be mindful of, there are a lot of people that are out there that are pretending to be me. There's over 30 fake pages, 30 fake accounts out there. Just be mindful. I am never going to message you. I am never going to send you a request on anything. So just be mindful of that. If you get a message that says from the portfolio plug, it is a scam. I only respond to inquiries. That's it. Anything that I need to say, I will always say it publicly so everyone can understand. So there is no confusion on anyone's part. So anything that comes from my mouth will always be public, whether it's in the Discord server, whether I'm live on TikTok or any form of social media platform, it will be public so people can see it and understand and know that it is from me. So if you get anything privately, it's not from me. It's a scam. So just be mindful. There are so many different fake pages that are out there of people pretending to be me. So with that being said, guys, make sure you let me get a thumbs up and make sure you hit that subscribe button. And then I will catch you guys on the next one. So thank you, guys. Thank you again for your time. Have a good night, guys.